All right. What's up, everybody? Happy Thursday. What day is today, Steve? Thursday. Welcome to this special live event. I'm Spencer Israel, CEO of Stock Market Media. The other guy is Steve Straza. You know him. He's the Chief Market Strategist at All Star Charts. Steve, how is this Thursday treating you? Okay, I hope.
You know, it's probably less good than most Thursdays, but still, it's okay.
All right.
Okay.
Well, fair enough.
Yeah.
So we have been, when I say we, I mostly mean Steve, has been doing a lot of work here behind the scenes. Now that we are in the thick of the earnings season calendar, if you saw Steve's video last week, he talked pretty good detail about his earnings season trading strategy. We got a lot of feedback. We got a lot of questions about that. So we figured let's go live again and let's answer those questions and let's have just Steve elaborate more about what he's been doing, why he does it the way he does it, how you can do it too. Does that all sound like a good deal?
Sounds fantastic. And there's nothing I would rather talk about on this fine Thursday afternoon than our earnings strategy here. This has been, Spencer, passion project that I feel like every step along the way in my career and my life really has prepared me to do this research and share it with the world now. We have worked on this internally for 3 or 4 years with our analyst team, and I've been working on it for as long as I can remember, since I was in college, really. Because if you understand earnings, right, and turning earnings into breakout trades, you have a major edge. Get rid of that in the market. So what I'm talking about here is I began my career as a financial statements person, right? Big on financial statement analysis. I was an auditor for a lot of the largest financial institutions on Wall Street. Really found a love for fundamental analysis through those roles. Later on in my career, moved on, met some folks like J.C. Peretz, became the chief market strategist here at All Star Charts. And that's when I really began that journey for my technical analysis and learning. So what we're really doing here is taking both of those disciplines, the fundamentals and the technicals, fusing them together with a little bit of sentiment, and it's really a holistic approach to the market. So you're going to love it. It's a simple, repeatable process. What we're really doing is identifying the best companies in the market, right? The top trends, okay? The kind of companies that will deliver earnings surprises quarter in and quarter out, and those will be huge catalysts for upside moves every 3 months. Right, so we're going to target 3, 5, even 10x returns are not unusual for common stock trades on a primary trend basis in the best stocks in the market. This research puts us in a position to never miss stocks like Palantir or AppLovin or Robinhood or NVIDIA. Impossible to miss with what we're doing here. But that's not enough. In addition to that, we also know how to trade the waves around earnings, right? Because 1,000% might sound great, but it might take 2 years in common stock. And that's not life-changing returns, right? The life-changing returns are when you could figure out how to go 10x each quarter in between through that cycle in the best stocks. Because what ends up happening, Spencer, is the best stocks in the market even don't move in a straight line higher, okay? There are ebbs and flows. And what you'll end up seeing is a big leg higher into a corrective wave, into another big leg higher into a corrective wave. And we go on and on and on. And that'll play out over and over and over again throughout the course of the cycle. We're fusing the technicals with the fundamentals to make sure that we catch those waves and trade them with leverage using call options. Let me just give you some examples, because I could sit here and talk about it all day, but the charts will explain it better. So Palantir is a stock that we've been on since 2022 when it bottomed. We knew it was a special story. We knew that this was one of the biggest, growth stocks in the market then. We saw them turning profitable, that Q1 back in 2022, but we didn't just buy the common stock in the teens, right, and still own it here today. Well, we could talk about that top, but that's another talk for another day. But we also traded the waves in between. So here we came in, we made 537% in 21 days. We bought calls. That's not the chart, is it? We bought calls long before that, but that's the second chart. We turned $1,000 into 6,370, 2,500 into 15,925, and $5,000 would have gotten you about 32,000. And we did it again. Here's the next one. Oh, this is Applied Digital. We did it twice with Palantir. So Applied Digital, we made a max return of 619%. I don't remember where we entered, but this was another stock that was in our beat report universe, right? That we're in the common stock. We're also trading the calls along the way. 1,000 turned into 4,600, 2,500 turned into 11,500, $5,000 turned into 23,000. What's the next one? Alibaba, one of our favorites, 120, big level, right? Bought the common on the primary trend reversal. It's been a big winner for us, but we also traded the calls along the way. 1,000 turned into 8,000, 2,500 turned into 20,000, $5,000 turned into 40K. Planet Labs. I mean, we're going to space. Who's coming with us? We bought the trend reversal in the Planet Labs back in single digits, right? Been riding that common stock for a long time now. That's great, though. What did we do to juice our returns along the way? I can tell you where we bought this one. I need the before and after charts, but we bought this one right on this VWAP cross here. Go back, Spencer. You see that blue line coming in, right? So that we play these corrective waves right here, coming out of this little continuation pattern. We get in right before the pop. This position returned us 886% in 43 days. Calls hit a max value of about $16, almost 1,600% return. And that just happened over the course of a month and a half. And that's what we're doing as like a kicker or a cherry on top to those primary trend common stock position. We're buying calls along the way, and that's really the difference maker in this system. If you can identify the best stocks in the market, Spencer, don't you want to make sure that you're making the most amount of money possible in those trends?
I like that. That sounds good to me.
It's basic, right? It
Yeah.
sounds like, yeah, of course. Why wouldn't I? But people don't do that. They buy the common stock and they say, oh, I'm good. I'm just going to own the stock. No, we're going to make sure that we own the options in those big up leg phases to juice our returns along the way.
Yeah, and that's pretty much what you're doing here.
That's it. And people say, how is it possible? Steve, how do you make so much money? And they also say, Steve, how do you sleep at night? You have all these positions. You're doing all this.
I don't know.
You're making money so fast. Well, we've been doing this for a long time. We're comfortable with the risk that accompanies a system like this. And we're trading a special type of options contract, right? That most people don't even know exists. We're not trading zero DTs. We're not trading weekly options. That's gambling, right? We're not doing that. What we're doing is trading 25 to 35 delta calls that expire a month to 3 months out because we're catching those beefy earnings, post-earnings or pre-earnings moments where the stock is really, in a big rally phase. Now, when we zoom out on this process, a lot more goes into it. It's not just technical analysis. It's not just trading options. We have a universe of the best stocks in the market that we know from our fundamental expertise, and we know how to pick. So we have this pond that we're fishing in of just top stocks. But that's not enough, because how many times do we see it? Oh God, is the past 2 weeks not a great example? Oh, did you want to buy Meta because they had a great report and we're up 10% last week? Well, it's down about 15% since. All of it's been erased. Did you want to buy Microsoft going into earnings because you knew that they would crush it, and they did? The stock's been absolutely punished, probably down 20% since its earnings last week. Did you want to buy Palantir because you knew they would have one of the best reports that you'll see this earnings season the other day? Stock was up 5% on the heels of an incredible report, and it's been absolutely decimated, down about 20% since. We avoid those traps because we're also factoring in the sentiment, right? Is the market agreeing with the fundamental story? It's one thing to say this stock's great. They're going to report incredible performance when the earnings come out this quarter. But it's another thing to say the stock's great and the market agrees. We're not here to fight with the market. So that's where these two boxes or circles, the yellow and the red circle, interplay with one another. It's not enough to just be a great fundamental story. The market has to agree. Okay? So if we could check both of those boxes, that's great. Then on top of that, we overlay our technical expertise, and I think we have the best team of technicians on Wall Street working with us. We have a team of about 8 CMTs who are crunching through all of these charts on a day-to-day basis right? And doing all of that technical analysis to make sure, okay, fundamentals check out, sentiment checks out, now the technicals check out too. So we have a little 3-step process. We got to check all of these boxes to find the best stocks. And then what do? We hit them super hard at the right times, right? And we trade the waves on them to make sure that we make the most money in the best stocks.
Yeah, I think that's the magic right there. If you are only looking at the fundamentals, if you're getting lost in the sauce of the earnings per share and the revenue and, oh, they beat estimates, the stock must go up. We see this every day during earnings season. I see it all over the social media. Oh, the stock beat. Why is it down? Because
Right.
you're missing the point, right? You're missing the point. It's not really about. It's not just about that. That is but one factor, but it is not the only factor, and that's what Steve and his team have kind of figured out here. So let's talk about this process that you got going on.
Break it down. Step 1, it's the sentiment analysis. And it's just what I said, right? It's the examples that I just gave. You come out, you have a great quarter, the market better agree. Because guess what? A company doesn't miss. The analysts can miss, right? And the estimates can miss, but it's really about the way that the market reacts to each earnings report. And that tells you everything that you need to know about sentiment analysis. People say stocks don't bottom on good news, right? The bottom on bad news. The market's forward looking, right? So we'll see stuff like that all of the time where all of a sudden a company that's been great stops being rewarded for earnings, right? Palantir was an example, a bullish example in the past where it was started being rewarded for bad earnings in early 2023. I remember when they turned profitable. I remember when their free cash flow exploded in May of 2023. The market was rewarding them ahead of that. That's what you see at turning points. So we're checking that sentiment first to see, is what we're seeing on the financial statements and the fundamentals, is the market agreeing with it, right? Then from there, we go to the fundamentals. If you go to the next slide here, I'm sorry, the fundamentals, and we have to say, okay, is that story in place, right? Are the fundamentals checking out? We're looking at things like margin improvement, cash flow quality, balance sheet strength, and really secular growth stories. So if you go to the next slide, we have a beat box we call the beat box black box, which is where you could see all of this. You're going to see all your basic earnings and revenue and gross profit margin information, but then you're also going to see how the market is reacting to that information, the reaction score. So you get all the fundamentals and all the sentiment that you need to know about all of the stocks in our universe in the beat box black box. And then, an example like Palantir, we're seeing these things happen at the same time. We're saying, wow, this fundamental story is really incredible. It's coming together. And then we say, wow, the market's been rewarding them now for their earnings reports for 2-3 quarters. Market's on board. They agree with, what we're seeing in the fundamentals. Okay, it's go time. And then we go to step 3, which is the technicals. We just have to make sure that the chart checks out. Right? We're looking for long-term primary trend reversals, big old rounding bottoms. We call them bases here, right? People are familiar. If you go back a couple charts ago, it'll show that big base just as it was completing, reclaiming the 200-day. That'll be slide 19, Spencer, right? And so you can see that beautiful primary trend reversal, right? At the same time that all of these good fundamentals and sentiments are playing out. Boom, boom, boom. Check all 3 boxes. Okay, this is a name we like. Now let's figure out how to make the most money we can on it. You get trade alerts. We're going to let you know when we do these things.
So was that a recent one? That was
Yeah, that's the first trade that we sent out to members.
Yeah, nice. All right. And then let's talk about the magic. The magic sauce here is the 25 delta calls.
Yes, we know that they're cheap enough that we can, position size responsibly. In the case that we're wrong, we could take a full 100% loss, but they're also juicy enough so that we can make 5, 10x returns very quickly and capture the big moves that occur pre and post earnings.
So when you talk about, it's not just about doing the analysis, it's about getting to the conclusion and then putting yourself in a position to make the most money possible. This is where the 25 delta calls come into play, and that's really important, right?
Yeah, they tend to be good call contracts. We'll go from 25 to like 35. Sometimes we have to, just take what we can get based on liquidity. constraints. But for the most part, that is the sweet spot. We do know that if we get a quick pop, we can easily take quick profits, protect ourselves, and then let the rest ride. That's really those are the same calls that we trade in breakout multiplier and have had incredible success with over the years.
Yeah. Sorry, you've synthesized all of this, and you mentioned that this has been sort of in the works for years. I remember 2 years ago when you were talking about this
Yeah.
out in California. So you've
Yeah.
synthesized all of this into what you call the beat report. Can you just explain briefly what that is?
The beat report is simple, right? Everybody wants to own the best stocks. They want to brag about the fact that they're in the best stocks to their friends when they're at their doctor's appointments and their cocktail parties, right? We're not just going to be in the best stocks. A lot of people can do that. It's actually not too hard. Right? But it's not about just being in the best stocks. It's about making the most of those opportunities. My grandmother used to say to me, you got to make hay while the sun is shining. Right? And what that meant is when times are good, go and use them to the best of your advantage, right? So when we see a stock that we know this thing's going to go up 1,000% this cycle, right? The opportunity here, the upside potential is huge. We're not just buying common stock, right? We're going to make it as much money as we possibly can. And we know the vehicles and the strategies to deploy in order to do that. And a lot of times that is those 25 to 35 delta calls. And we're going to go through all of this together. The thing about the beat report, right? For members of Breakout Multiplier, we're more or less just sending you trades like hot trades nonstop and saying, you know what to do. You know what to do. At the beat report, we're going to walk you through everything, right? So the community that we're building here is incredible. And you're going to see exactly how my long-term portfolio plays in my short-term portfolio, all of the considerations that go into the decisions that are made, right? How we're using this kicker system, right, to juice our returns along the way in the best stocks when we're coming off the gas, which happens a lot too, right? These stocks endure corrective waves. We don't want to be long calls during those periods. So we're going to talk about all of that. We're going to hold your hand kind of through the portfolio management so that you learn exactly what we're doing. It becomes secondhand, second nature to you. And you can then create this repeatable process for your own using the Beatbox and our other tech tools, right, to kind of figure out your own way in a system like this.
And
so that
Steve,
weekly call, yeah.
Steve, I'll add. Steve just did his first weekly call for members yesterday, right?
Yeah.
Over 100 people showed up. Right.
Yeah, it was a lot of fun.
Yeah.
Yeah.
And
No, there's got to be people there because that's half of the call, Spencer, right? I'm not just showing up to these calls talking about what I want to talk about. Sure, that'll be a portion of it because it's important, but I want to hear from my members, right? And we'll talk it all out together. So they'll come bring their questions, comments, concerns, ideas, right? Hey, how are you doing this? How are you doing that? Why are you doing this? Why are you doing that? And we figure it all out together. It's a really, really interactive weekly video that we hold.
Yep. So that's every Wednesday. You also get you get the ideas, you get the call, you get much more I guess you would say hand holding, right? Than maybe you might be used to if you've ever been a part of the Breakout Multiplier or done that with Steve. This is a little bit more more hand holding than that, right? As you said. So there's the biweekly emails, there's the mono portfolio tracker, all those things, and this is all within the framework of earnings season, right? And for better or for worse, earnings season used to be like a pretty condensed, call it what, 4-week window, Steve. That's kind of gone away, right? There is still like a heavier portion of the earnings season, but it kind of stretches out throughout the entire quarter. There's kind of always new earnings reports trickling in, right? Like every week, even though kind of it maybe in 2 weeks from now, we'll get past the majority of them. There's always going to be more. And the cool thing is what Steve is doing and the guys at the B Report are doing, they're not just a slave to the calendar. They're also looking at the past. They're looking at what happened last quarter, 2 quarters ago, 3 quarters ago. And they're using that to look ahead and say, okay, well, I know that, I don't know, I'm making this up. I know that JP Morgan reports earnings in 2 or 3 weeks. Let's look at what happened the last 3 or 4 quarters, what they said, what were the reactions, what happened, how can we use that to trade this upcoming report? And that's pretty much what they're doing.
You did a really good job there, Spencer. Right? We tend to be like price trend people, but nobody ever talks about the earnings trends. those are the biggest catalysts 4 times a year, right? So we're super focused on the earnings trends because we want that wind at our back. Until now, this research has never been available publicly to follow for a number of reasons. Really, the world is flattened in terms of information and the access to data. I remember when I started my career, I used to dig through actual 10Ks that were sent in the mail,
Yeah.
and we would mark them up with, pens and pencils and different, we would use different color pencils, right, to try to, make our markings clear when we go back and try to look at it. But we weren't even using Excel spreadsheets back when I was in college. I mean, barely. So due to the rise of big data, right? We can organize and crunch all this stuff. I also now have a team of 8 incredibly talented analysts, right? Because one person can't do this for the entire universe of stocks that we want to cover. So we have, 2 guys who all day are going through these reports every morning, every night, as humans, not as AIs, right? We'll use AI tools for some things, but we can really take, a huge volume of information, organize it and analyze it in a way that we never could in the past. So thank God, God bless technology to really kind of set us on our way here and allow us to bring this to the public. It's really cool. I used to
Yep.
just be a guy in my office reading through 10Ks. You can only do so much back then, right? How many stocks could you really follow well? 10, 15, 20. Now we can cover 300 stocks at a time quite easily due to the technological advances of the past 10 years.
So again, the B report is available. It went live really for the first time publicly. I mean, it's been live for a while, but publicly it went live a couple weeks back, and the guys have been rolling out trades pretty consistently this entire earnings season. You saw the video alert that went out a couple days ago. But like I said, there's always new reports coming, which means there's always new trades coming. So this is what you get. You get 5 to 10 high conviction ideas per year. You get the weekly video. You get deep dive reports, the model portfolio, and just the ongoing barrage of trades as earnings season sort of comes and goes each quarter, right? I do want to mention that if you were watching the video last week, we had a special offer. That special offer is still here, but it is not going to last. In fact, we're going to raise the prices in a few days. We'll leave it at that. So if you're watching us on YouTube, there is a link that is in the description and in the chat. If you're watching us on allstarcharts.com, just scroll down. There's a button right there. It'll take you right to the page to sign up. As always, par for the course, 30-day money-back guarantee, no questions asked. Try it. You don't like it, it's not for you, whatever, we can still be friends. I don't think that'll be the case, though. So you can cancel anytime, but if you are into earnings, and I know that most people, even if they say they're not, they like the volatility that earnings season provides. So therefore, they're into earnings, right? Most traders, they like it. If you're into this, this is for you. I want to answer some questions, okay? Because I said we'd do that at the beginning. We got questions last week, and we're getting more questions now, Straza. The big one, of course, is for people who are familiar with you. What would you say is the big difference, or the overlap, if you will, between this and the breakout multiplier?
No, it's a great question. It's going to be hard to avoid overlap at times, right? Because we want to be in the best opportunities in both of these services. But really, breakout multiplier is short term. Beat Report has a much longer term focus. Breakout multiplier has 0 quality filters. We will trade the junkiest stocks. We don't care, right? There's no line for us when it comes to breakout multiplier. We're just trying to play a quick pop. With Beat Report, we're focusing on only the highest quality names in the market, right? So we have that wind at our back. And also, it's a much longer term system. And then we're going to give you all the education you need. Right? Breakout multiplier, we're just kind of like, here are the trades, figure it out, good luck. With Beat Report, we're going to teach you how all of this works, right? And you could learn the same kinds of options trades that we're doing in Breakout Multiplier in Beat Report, but it's just more of a holistic approach, right? And there's a quality filter and there's a longer term focus. Of course, we're still going to trade the waves because we can't help ourselves, right? We're trying to do the right thing out here. But it's just a lot more at Beat Report than Breakout Multiplier. You'll get less trades, more hand holding, longer time frame, higher quality universe.
Yeah, I would say from a user's point of view, breakout multiplier assumes a certain level of knowledge already.
Yeah.
Steve and his team, they put out ideas, they put out trade alerts, and then the managing of those trades is sort of left up to you because everyone is different. We all have our own different risk tolerances and time horizons and all that jazz. Beat report, like I said, is more hand holding. They will explain it to you. They will, give you more guidance along the way and explain not just the what, but the why behind it. Right.
Yeah.
So there's more oomph there. I think that's probably one of the main differences. And is this a long only strategy, Steve?
Yes, it is.
Okay, so you're only buying calls.
Yep.
Okay, I think that's important. But
I mean, we're buying common stock. We could buy warrants. We could
right.
buy leaps, right? We'll do different things, but we are betting on higher prices in the best stocks in the market.
Okay, there are some questions in the chat. I see you, and I'm not ignoring you. Let's go to a couple. This is from Thundercat. Do you factor in unique company or industry specific KPIs? In Microsoft's case, we're talking about I don't even know what that means, but do you look at
Yep.
company or industry specific KPIs in the fundamental analysis part of this screen?
Of course we do. You better believe it, right? That's where a lot of great fundamentalists gain their edge, is in these KPIs, right? There's more than just what's reported in the financial statements. We work with the best KPI data providers, they're partners of ours, and we also have our own archive of KPI data. So 100%, that'll be in just about every deep dive report that you get.
Steve, as a general rule, like how risky would you say these trades are that you're making?
They're risky. I mean, if you want to make a lot of money in the market, you have to take a certain amount of risk. So I'm not going to sugarcoat it one bit. This is a high risk, high reward system. We're trying to make a ton of money out here. We will limit our risk in certain trades when we're just trading calls, right? Your risk is limited to the amount that you pay for the position. But a lot of times we're looking to risk the entire 100% of that position, similar to breakout multiplier. So look, the problem with the market is if you want to make big gains, you're going to take big risks. You have to learn how to do them responsibly, which is something that we are experts at.
And again, let's not forget what are stocks? They're risk assets, right? So
That's it.
you don't get the reward without some baseline level of risk. It is par for the course, and we always want to make sure people understand that. Here's a good question that just came in from Osprey Mole 23. What's the average hold time on a trade? Great question.
Trade average hold time will be about 60 days. But for the investments that we're making, the common stock positions, the average hold time will be 12 months plus.
Sorry, 12 months? That's longer than I would have thought.
We're trying to get that long-term capital gains treatment in our common stock positions, right? And trade the primary trends there. But then we're also going to trade the waves along the way using call options. And those positions will be obviously naturally much shorter time frame, 30 to 90 days most of the time.
And here's another question we got since last week's stream, Steve. Are you only trading stocks like after they report or before they report, or what's the ratio there?
The bulk will be pre and post, but we also will have times where we're saying, man, this company's definitely going to beat. They've been, up 40% the last two times. Planet Labs was a good example of that. We did that, I think, last quarter with Planet Labs. Stock was up like 50% on earnings. It was up 40% the last two calls before that. So we will trade things straight through earnings. However, that's not what we'll be doing most of the times. The beautiful thing about this, Spencer, is we know what to do, when to do it, and how to do it. Okay. So it's always going to differ. This isn't just some like set process that's like, oh, we're going to come in right after earnings and trade them this way. Nope. Sometimes we're going to trade them ahead of earnings and catch the pre-earnings drift. Sometimes we're going to trade them after earnings and catch the post-earnings drift. And sometimes we're going to trade them right through earnings. But I would say that situation would be the rarest, to hold them right through earnings.
Can you just qualify the risk management part of the strategy and sort of what you're doing there? Because I feel like that needs to be qualified. We did say, these are risk assets. Strategy involves risk to an extent, but obviously we always talk about in trading and investing, it's not always what you can make, it's what you can lose. So we can just talk about your risk controls and how you control that.
We will have stops on our common stock positions. Sometimes we will stop out of losers on the options trades. Sometimes we will just take them to zero and be okay with, our cost basis as the total risk capital there. However, there won't be stated stop losses at the time of the report, right? Because every day we get new information from the market. So one problem with a lot of these services is they say, "Oh, we're buying it above here, but we don't want to be long below here." No, my stop losses change on a day-to-day basis. So you're going to know exactly how I'm managing the portfolio because again, we're going to hold your hand and tell you exactly how we're entering and how we're exiting positions, how we're managing winners, how we're cutting losers, right? So that'll be very clear and it'll be sent to members in email and it'll also be in rangefinder, but they won't be stated in the trade idea reports because that's not how real investors do things.
Yep. All right, so I mentioned the fact that we're running a special offer. That offer does end Sunday at midnight. So after the Super Bowl, don't forget if you haven't pulled the trigger by then, I really recommend you do it before Sunday because this 75% discount is going away. I do want to also add if you are a member of any other stock market media, all-star charts, product, and you have a question for us about how this fits in or what you can do, you can always reach out. The email address is on the screen. I'll even put the phone number in the chat on YouTube as well. The phone number is on our the website page right now, but I'll put the phone number in the chat. It's 323-421-7910. If you have any questions, please reach out to us. Email, call. We are glad to answer them and kind of talk you through what this entails and how this can be sort of a supplement to what you're already doing. Last one, and then we'll hop, Steve, because I know we're coming up against the clock here. This question just came in from Ron. He says, do we have to know, quote, options trading in order to use the beat report?
That's a great question, Ron. You don't, because this is options trading 101, right? We're not trading any complex strategies, strangle straddles. We're not selling premium. No, this is a binary option system. We're going long calls. We'll keep it super simple. If you are wondering, can I even do this with my broker? This would be what they call options level 1 trading, right? So anybody can get access to it. We're not trading complex option strategies. This is something that any investor can easily understand. And if you don't understand it today, you'll learn it. You just show up to the weekly members calls. We'll help teach you.
Yep. Okay, I lied. One more. What's the best account size, do you think? Or maybe I should say minimum account size you would need?
They should really have at least 10 grand, but you don't need much more than that to exercise most of these trades. Sometimes, some of the call premiums can get pretty high and you could skip those, but I think you could make this work with a $10,000 account.
All right. So once again, the link to join and get access to these beat report trades as they roll in. There's more earnings reports in like an hour and a half. We're going to hear from Amazon, right? We have some big ones. We have Walmart in a couple of weeks. All the retailers have reported yet. We got a lot more earnings to come in the next few weeks. If you want to get these trades and try them out and see if they work for you, use the link. If you're on YouTube, use the link in the chat and description. If you're on allstarcharts.com, just again, scroll down. The link is right there. This offer will end on Sunday night, at which point the price will go up. So I strongly recommend you get in before that happens and see how this can help you. Again, it's not just about making money. It's about making the most money that can be made. Right? Steve always says you have to make hay while the sun is shining. The sun is literally out right now. We're trying to make the most money that can be made in this earnings season window while we're getting all the reports every day. There's probably 40 or 50 major reports a day for the next 2 or 3 weeks. So a lot going on. And I know Steve has a lot of positions. He has to go manage them. So Steve, I will let you go. Thank you for doing this. I know you did this also last week, and I asked you, please come back, do it again.
I
You,
love
you,
talking about it.
you obliged. I am grateful. The people are grateful. Thank you for watching. Any questions? I'll put the contact up on the screen one more time. There it is. Please reach out. We are here to help you. And Steve, keep on keeping on. You guys, again, I was there 2 years ago when you like unveiled this the first time, and then it's been a 2-year process to actually perfect this, and you have. So good job. Keep doing what you're doing. And I will see you inside my portfolio. How about that?
It's taken some time, Spencer, but it's all worth it. Come in, you get a 30-day risk-free trial. Check it out. I think you'll really like what we're doing here. Like Spencer said, it's not enough to just find the best stocks. You got to make sure you're making the most money possible on those best trends. That's exactly what we do here. So come check it out, be in the room with us, and you'll see exactly what we're talking about.
All right. Thanks for watching, everyone.